This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm your host, Kerry Lutz. It's 7/26/23, show 512, and it's Fed Day, Nick.
It is Fed Day, Kerry. The FOMC will make its interest rate policy decision for the U.S. at 2 p.m. this afternoon. Now, the Fed is expected to raise rates by 25 basis points. That's going to bring the Fed funds rate to 5.25% to 5.5%. Many investors are expecting this to be the last rate hike, but I'm not so sure that'll be the case. As you know by now, the 2-year Treasury note yield will determine when the Fed is done. But right now they have some wiggle room. Currently, the 2-year yield is around 4.88%. So the Fed funds rate is above that. Hence, that helps the markets to believe that the Fed is done. And as I said, a lot of people think that today's meeting will be the end of rate hikes. But we'll have to wait and see. And we'll let the markets tell us a little bit more. Today's verbiage will be important because, as I said before, the rate hike is already baked into the cake.
All right. So it's definitely going up today. They said last time, well, they didn't raise last time, that we're pausing. And, the stated inflation numbers are looking a little bit better. But here they go. They're hiking again.
Yeah, they're hiking again. And honestly, I think they're doing the right thing by hiking because you have a war going on in Russia and Ukraine. It's a proxy war. There's even more battles going on in Sudan. Nobody's talking about that either, but that's a proxy war between Russia and the United States as well. So these are inflationary. If you get any kind of supply chain disruptions, that's also inflationary. So the Fed knows this. They're not stupid. These guys have MBAs, PhDs, mathematicians, statisticians. They're all on their staff. So the Fed is trying to, stay ahead of that 2-year Treasury note yield because, let's face it, that has really telegraphed everything for well over a year now.
Yeah, the one people they need on their staff, but they don't have are magicians.
I wouldn't rule that out. They might have magicians on there too. Sometimes we see the market make this move with the last 5 minutes of the day, go up 300 points. So that's a magician pulling that off.
Pulling a rabbit out of a hat, right?
Oh, they do it on more than one occasion too, so it happens quite often.
That's the truth. And of course, earnings are still trickling out.
Yes, we had earnings last night from Microsoft and Google. Microsoft currently right now is trading down by about 4%. And I believe Google today catching a pretty good bid, at least right now, trading up by nearly 6%. So that's kind of a wash. One mega cap tech name is down, the other is up. And tonight we get Meta earnings, and then next week we'll get Apple and Amazon. That'll be the end of the mega caps. But, we have tons of earnings pouring in right now. So traders should stay tuned. There's lots of other important companies out there that will be reporting earnings as well.
So just when you thought it was safe to use the ATM, they throw something else at us here, Nick.
Yes, they did. The financial stocks, they're rallying today. But I have to say, yesterday we did get news that Pacwest will be taken under by Bank of California. Not a takeover, it's a take under. Yeah. This tells us that there are, lots of consolidation that's still yet to come in the regional banks. And there's lots of problems out there. Hence, that's why we got the rally. We all know that since March, there's been a lot of liquidity thrown at these banks. And that liquidity has to go somewhere. And it goes into the stock market. And that's why we've seen the meteoric rise. It really had nothing to do really with the economy being so great or, this or that. It's just about money having to flow somewhere, and it flows into the stock market.
Nick, contrast the way they took under or took over Pacwest with the way that they botched SVP. Silicon Valley Bank.
Yes.
If they had just done Silicon Valley Bank the way they did Pacwest, probably wouldn't have had to take over 3 out of the 4 banks they've done so far. Maybe they could have saved on 2 of them. But because Janet Yellen was repeating that there won't be any bailouts of banks, they drew it out over a weekend, and then the market was about to like melt down, and then they came to their good senses and took over the other, Silicon Valley and Republic and the rest of them, right?
Yeah, that's pretty much it. The big question is, Kerry, if Tom's mom and pop bank down the road, though, were to go under, would the Fed bail out depositors? And you got to remember with Silicon Valley Bank, I mean, there were companies in there with, $2 billion or more, right? Roku had a large percentage of their cash flow in there, and many others. So we saw depositors made whole that well above the 250,000 limit. So, you just have to wonder, how does that work out if some little local regional bank fails? And I'm not sure it'll work out the same way. But now we're in this scenario where a lot of these regionals are just, they're not going to come out of this. They're going to fail. And looks like that was the first brokered deal yesterday since, the Silicon Valley and First Republic debacle.
Well, this is the way they're all going to work from here on in. Never forget that the fiat currency system and a fractional reserve banking system all rest upon confidence that when you go to your ATM and stick that card in, you're going to get your money out. And the day that confidence goes away is the day that the system ceases to exist. And therefore, every dollar of deposits will be paid off, even if it means whatever cost to the dollar would be incurred.
Yeah, I mean, we live in a money printing society. So since 2009, that has really come to light. That's been the answer for everything. And, hence you just keep printing money. You're going to get inflation. So, I know the Fed is telling us they're going back to the 2% inflation target. I got news for them. It's not going to happen anytime soon.
Yeah, well, hey, love to see it, but when it happens, you and I will both break out the champagne, because the Dom Perignon or the Cristal or whatever, because we can keep that bottle safe. It ain't happening anytime soon, unless there's a total money collapse. It won't go down to 2% unless it goes to negative 2%, right?
I agree with that.
All right. So gold pretty much flat today?
Yeah, gold is flat today. It's had a great run. Gold futures got up to that 1985. They stalled out there. But, today's Fed announcement could move gold again. So just, be prepared. I don't know what the verbiage is going to be coming out of the Fed, what remarks they're going to make there. There's a press conference, obviously, at 2:30. But, gold is flat today. And, again, precious metals are always in play, as are bond yields during a Fed announcement. But it's going to come down to what they say, how the market reacts. Either way, gold has got to be watched pretty closely here, because we have so many geopolitical events, and, pattern is very, very important. But, gold doesn't look terrible at this stage of the game. I'd still love to see one more pullback to get in lower. But, again, you just got to watch the charts and let it tell you a little bit more.
All right. Well, and then Bitcoin up slightly today.
Yeah, not much going on in Bitcoin right now. That could also be a mover on the Fed. But, the weekly chart is still constructive. The daily chart is really choppy and ugly, to be honest. But, we want to try to use those bigger time frames when we can. And right now, the weekly chart for Bitcoin is still holding up.
All right. Well, that is it for today. Go over to Nick's site, inthemoneystocks.com. See his trading records. He always beaten the averages for decades. Twitter feeds at ITMS, at Nick Santiago 01, at Kerry Lutz. And please send your comments to KL@kerrylutz.com or leave them below on the YouTube channel. Nick, we will catch you on Friday.
Sounds good, Kerry.